Everyone is chasing for AI gold, but the company that gets rich in a gold rush is the company that sells the shovels. Or in this case, a machine that no one else can build that is absolutely essential in this AI race. Apple's chips, Nvidia's chips, the next nodes at the world's biggest fabs all depend on one supplier. And this video gives you the simple version of the moat, the money, the risk, and how I think about one of the biggest potential AI winning stocks right now. Think of this company as a provider of hyper precise printing for circuits far smaller than dust. And the interesting thing about this is that every AI chip and even non-AI chips need these patterns. And of course, if you want smaller, faster, cooler, and better performing chips, you need the newest generation of this printer. There's only one company that currently sells this and is based in the Netherlands. And its supplier network is basically irreplaceable. And this is what ASML does. The Moat has 3 layers. First, technology, and this is because they made extreme ultraviolet processes work at a commercial scale that allowed these circuits to be built. The second is manufacturing, where these tools are literally assembled like spaceships. They have so many different complicated parts to be assembled and be able to produce these different circuits. And then number 3 is the supplier network, where the optics, the light sources, and so many other components that the machine needs are provided by very few partners in the whole planet that can deliver them efficiently and at scale. And ASML owns the entire ecosystem. Now, of course, no company is without risk, and there are 3 main different risks that you should really be monitoring if you're interested in investing in this stock. So first, we have foreign policy, where different export regulations can significantly impact the performance of the company because the company sells globally, and with tariffs and with different regulations that are taking place in the marketplace, this can affect the ability to be able to ship its products to different customers. Second, there's customer timing, and this is because if a big fab manufacturer delays a node, the orders move right, and this creates additional unused inventory for the company. And then of course you have supplier concentration, where for many optics and light sources that the company needs, these companies are very specialized, so there's very few potential suppliers, and they can cause a ripple in the company's production. Now, none of these by themselves breaks the thesis for the company, but they do change the timing. And this is why your model needs a bear, a base, and a bull case. For ASML, 2024 was a bumpy year. Revenue only grew about 2.6% to 28.3 billion euros, while the net income slipped by 3%. And this is because the margins compressed as the cost rose. This doesn't break the company's thesis. In fact, bookings reaccelerated into Q4 2024 with 7.1 billion euros in new orders, and management guidance was lifted to be around 30 to 35 billion euros in sales in 2025. Long term, this means about 8 to 14% compounded annual growth all the way to 2030, with potential gross margins in the range of 55 to 60%. And not only this, but the broader semiconductor equipment market is projected to grow about 8.1% in terms of CAGR heading into 2030. The next generation product for the companies are already here, with the new ASML XE5000 and XE5200, which pushes below 2 nanometers logic and keeps Moore's law moving for AI. Not only that, but these early systems are already landing at Intel and TSMC, setting up the next level of node transitions. Under the hood, the company's cash is superb. We're talking about a free cash flow that recently topped 9 billion in 2024, and the company company pays a dividend of 6.40 euros per share in 2024, with new dividends moved to a quarterly basis in 2025, with the first one being 1.60 euros paid in August. Now, bringing all of this information together into my price prediction spreadsheet, you can see these are my assumptions, which are very much aligned with what management is expecting and what other analysts are expecting as well. With these assumptions and the current stock price of $741, we're looking at upside downside percentage right now of 0% at 11% discount rate. So what I'm doing is I'm building a position in the company now. However, if the company's stock price drops even more, then this even becomes a more attractive investment opportunity. And by the way, if you want a link to the spreadsheet, make sure to comment spreadsheet on the video and we'll send it to you. In conclusion, the AI race will definitely have some winners, but the biggest winners are the ones that win no matter what happens in the race. And these are the companies that sell the shovels. And in a nutshell, that is ASML. If you value moats, if you value fundamentals, and you believe in what's happening with AI, now you know what stock to watch. Make sure to like and subscribe to the channel, and I'll see you in the next one.